Alrighty, traders, good afternoon and welcome to our live session. This is part 2 of how to trade harmonic patterns, how to make money trading harmonic patterns. I do apologize for the broadcast, the live broadcast today. There's something that's not quite right with YouTube right now. When I go through my software to go ahead and stream live, it doesn't seem to be streaming live. I had to do something else. I actually was live at 1 p.m. this afternoon, going live for 45 minutes and realized that it wasn't really streaming. It wasn't even coming through. So we went ahead and extended it out to this time, and we had to still make some adjustments to our live stream. I'm just glad everyone's here. Hey, listen here. My name's Gary Fichardt, and in this session, we're going to be talking about how to deploy trading systems, automated trading systems, trading robots, some may call it, in the direction of the highest probability. Now, we've already gone ahead in part 1 of our series. We've gone ahead and spoke about directional bias. And we've taken a simple daily time frame and drew in simple channel lines to identify where markets at support or resistance, or from support or from resistance, and then looking to deploy trading systems, trading automations in that direction. And so what we're going to do in this session, we're simply going to go ahead and deploy trading opportunities for the week in a direction based on our directional bias. Now, the patterns that we're going to be trading are harmonic patterns, and they can be reversal patterns, they can be continuation patterns. So these patterns can be both reversal and continuation patterns. But what we're not going to do today is we're not going to deploy the trading system on a buy and sell option. All right, we're only going to deploy it either bullish or only going to deploy it bearish. So we're definitely going to make a decision as to how we're going to trade it based on the directional bias and then deploy it in that direction. So with that being said, and I'm glad everyone's here. I can see everyone's loading up right now. Fantastic. Everyone's joining. Glad you guys can join. Let's go ahead and take a look and see exactly what we're talking about. Now, I'm going to go ahead and show you what we did last week. Last week, or at least in the part 1 of the series, we did go ahead and take a look at the directional bias, right? And the directional bias was just a simple trend line. And plotting the trend line down, we could identify whether or not we're going to be buying or selling in that direction. And so as I go to all the different currency pairs, we're just simply going to go ahead and look at where we're at right now and make a decision to deploy it long or short. I'm going to go into the actual the automation, and I'm going to show you exactly how I'm going to deploy it. So with that being said, let's go into a couple of things that you need to know about the automation and about running automation. All right. Now, whether you're trading with MT4, which is MetaTrader 4, or whether you're trading with the software I'm going to be using today, which is a Smart Trader Scripts, which is automation, there's a very similar condition, or not condition, but a similar rule that you need to understand. When you're deploying any sort of automation, if you go ahead and remove the automation from the actual chart, or if you shut down the actual software that you're trading, what's going to happen is the automation is going to stop running. Which means that when you load it back on, when you reload that software back up, or you go ahead and add the scripts to that chart, the automation is going to start off from scratch. It's not going to recognize that there was a trade in before, and that's important to realize, because I've had students in the past that are going ahead and deploying the script on our Smart Trader platform, and what they're doing is they're going ahead and pressing refresh. Every now and then they're pushing refresh. And what's happening with the refresh button is it's reloading the chart, it's reloading the script again. So the script is reloading, which is basically saying, let's start all over again. Now, the problem here is, if you have a trade already active and it's running based on conditions, and those conditions are still there, guess what? Every time you press the refresh button, what's going to happen? The script is going to reload again and say, oh, we've got a trading opportunity. Let's go ahead and place a trade. You go ahead and press the refresh button again. It's going to completely ignore the trade that's already in. It's going to reopen again and say, we've got a trading opportunity again. Let's go ahead and deploy a trade. And so if you keep doing that, what's going to happen is the system is going to constantly place trades, more trades and more trades and more trades, to a point where you could over leverage and actually blow up your trading account in just a short period of time. We don't want that to happen. I don't want you to go through that hardship. So very importantly, what I'm doing here is I'm going to load the charts. I'm going to load the charts up, and I'm going to load the scripts up on each currency pair that I want to trade, and I'm not going to touch those charts. I'm not going to refresh it. I'm not going to go ahead and change it. I'm not going to change the time frames. I'm just going to leave the script and let it run. And I'm going to do that for the next few days as we come back and we review in our part 3 series. We go ahead and review the trades and see what happened. Now, there's a couple of other things that you need to understand about trading. Sorry, I'm laying all the rules up front because I need you to make sure that you understand this. All right? Equity management is key. Look, you can have the best trading strategy in the world, but if you don't have good equity management in your trades, you're simply not going to be successful. It's just that clear. Now, if you're using fixed lot sizes, if you go ahead and trade these patterns and you're using fixed lot sizes, remember this, that each time you go in and enter a trade, that trade could be different than the previous trade, which means that the stop loss could have differences in the amount of pips that you are risking, which means one trade may be a 50 pip stop, the second trade may be a 100 pip stop, the third trade may be 75 pip stop. So they're going to vary. The stop loss is going to vary based on that level of how many pips that you've got on each trade. Now, what does that mean? That means that if you're using a fixed lot size, you're not going to get the right risk-reward ratios on each trade. In fact, your equity management percentages are going to vary. You're not going to be risking the same amount of risk on each trade. You will not, because you have to adjust your lot sizes according to the actual distances of your stops. So if your stop is a 50 pip stop and you're trading with one micro lot, then if you have a 100 pip stop, it cannot still be one fixed micro lot. It's got to be something different. And that's how you have to make sure that your lot sizes are adjusted according to the amount of risk that you're having. Now, equity management is something that we definitely need to cover, and I'm going to do that in a different video. But in this video, what I'm going to focus right now is making sure that you understand that we need to have good equity management on all our trades. And so when I go through this, what I'm going to use is I'm going to use a risk percentage instead of lot allocation. I'm going to use risk percentage that's going to be applied to the chart. So check this out. All right. So if we go to and I'm going to start here right at the top, Euro US dollar. If I want to go ahead and trade this right here, I know that price has moved down. We have a little bit of room down here where price could still move down to this point right here, but we're expecting price to move in a correction. Now keep in mind that I'm looking at a daily chart, and so I have to understand that price is going to move down, go up, move down, go up, move down, go up. And so right here is exactly that. Price is now going to move up. Even though it's going to be short term, I'm expecting price to go up. And so in the next couple of days, if I go down to a lower time frame, the lower time frame may give me some bullish opportunities. So what do I want to do? I want to go ahead and deploy my trading system on the Euro US dollar right here, and I want to go ahead and deploy it bullish. Check it out. So here is my Harmonic trading system, and I've gone ahead and looked on the Euro US dollar right here. You see it right here. I'm only going to look to buy. I'm using strategy 2, and I'm going to go ahead and put a risk percentage of 0.1. Now, let me explain all of this information right here so you can better understand how we're going to be trading, right? So the first thing is I'm identifying the directional buys. I'm buying only, all right? Because I'm expecting Euro US dollar to rally. So I'm buying only. Now, what I'm also doing is I'm using strategy 2. What is strategy 2? Strategy 2 is a multi-entry strategy, which means that I'm not going to only enter at one level, I'm going to enter at multiple levels. All right? Now, if I'm entering at multiple levels, let's talk about equity management. How am I going to manage that? Well, I'm going to have to make a decision on not only what percentage risk am I going to place on each of these levels. That's one. So what I need to know is what my total risk is going to be. And then step two, I need to know how many currency pairs am I going to focus in on. Because the one thing that you need to make sure about is that you're not trading 28 currency pairs with high risk on each trade, giving you an overall risk that could end up putting you in a situation of either getting margin called or running out of equity. So we've got to manage that as well, because this year, as much as we want to believe that we've got all the money in the world to go ahead and blow on whatever you want to go ahead and do, we don't. We've got only so much capital that we can trade with. So this is not an open checkbook, right? We've got so much capital we can trade, and we've got to manage that risk properly. So this is what I'm going to do, all right? And you can do whatever you choose to do, right? Everyone's going to be accountable for their own action. But what I'm going to do is this. I'm going to look at my account, and I'm going to say that if I want to go ahead and trade 20 currency pairs, all right? And if I want to follow 20 currency pairs, what is my maximum risk that I'm willing to take? Now, I'm going to say I'm willing to take a 6% drawdown. This means, or at least 6% total risk. This means that out of all the currency pairs that I'm trading, out of all 20 of the currency pairs, at any given time, my maximum risk exposure that I'm willing to take is 6%. That means if I pick up 20 trades with 3 positions in, with 3 entries in, my total risk is going to be 6%. All right? That's what I want to do. Now, pay attention to the way I work this whole process out, right? Notice that I'm talking about how many currency pairs, how many trades, and then I'm looking at my total risk of what I'm looking at risking, right? So I'm looking at 6%. How does that all work out? Well, 6% would mean this. If that's going to be my total risk that I'm willing to take, then what I need to do is I need to go ahead and say, where do I start? Well, if I start off by risking 0.1%, and I've got 3 trades on each currency pair that I'm going to enter, that means my maximum risk on each trade is going to be 0.3% total, right? That's it. 0.3% is going to be on each trade. Now, if I'm risking 0.3% on each trade, and I'm looking at 20 currency pairs, what is my total risk going to be? My total risk is going to be 0.3% times that by 20 is going to equal to maximum 6%. All right? Now, the good thing is, I don't expect to have all 20 trades in at the same time and be at a drawdown and lose on all 20 trades. I don't think that's going to happen. But I am looking at the worst case scenario. And that as a trader, we have to. We have to look at the worst case scenario. We cannot think that everything is going to run hunky-dory and everything's going to be great and we're just going to roll the red carpet out there to profits. All right? It's not always going to happen. We have to look at the worst case scenario so that we know that, hey, if the worst case scenario happens, if all 20 trades at the same time open up and we go into a drawdown, what's my maximum drawdown? 6%. Can I live with 6%? Now, I might say, yes, I can. But you may turn around and say, well, Big Dog, no, I don't think so. 6% is way too much. I'm willing to risk 3% as a maximum drawdown. All right? Then that would mean that you'd have to go ahead and calculate your risk so that you've got your maximum 3% drawdown. Now, some might say, well, Big Dog, I can go with 12% and I'm okay with 10% or whatever the case may be. You work out the maths according to what you're comfortable with. All right? Now, very importantly, now that we've established that we can go in with a 0.1% risk, then what I need to do now, I need to go ahead and make sure that my system is running with that amount of risk. And so let's go ahead and take a look and see what else I've done here. So right here, as you can see, we've got risk percentage 0.1%. That is my risk percentage right here. And I'm looking to buy on the system. So on the euro US dollar, I am a buyer in the market and I'm going to constantly buy this market all week long until the market changes directional bias. All right, so as long as the directional bias remains bullish on the euro US dollar, I am going to be a buyer in the market, and it looks like something like this, right? So I'm going to go ahead and clean up right in here, and I'm going to go back to my chart. This is right here. And on my chart, you can see right here, as long as I'm seeing price moving back in this retracement, and we could absolutely go ahead and see price come back up to retest this bit of support right here. And if it comes back to retest that support right here, I may go ahead and make a decision that I don't want to pay attention to any more buys on this pair, but I may want to go ahead and look for selling opportunities, bearish patterns, and sell the market back down south. But for right now, I'm going to go ahead and say, let's go ahead and buy to the top, right? Let's go ahead and buy the top. So what I've done is I've gone ahead and deployed my trading system right here. And you can see right here, there's all my euro crosses that I'm following. And I've gone ahead and set this one up right here to go ahead and buy. There it is there. All right, so there's the buy. So if I go to the system itself, you can see here that I'm buying only on the euro US dollar. Now, as I go through a couple of more, I'm going to just go ahead and show you some examples right here. This is what I've done on a couple of others. I've gone into the next currency pair, which is the euro Aussie dollar right here. Now, the euro Aussie dollar, with us being in an uptrend, we're looking for price to go ahead and test the top here. So when we did our analysis last week, we decided to go ahead and trade bullish on the Aussie, Euro Aussie, and so we're looking for bullish patterns, all right? Bullish patterns. And if you missed out last week's, which is part one of the series, you may want to go ahead and check it out, right? You may want to go ahead and check it out because it's good information. It's going to be able to set you on the right direction, and it's going to make you understand exactly what's going on right here. I also went ahead and shared the workspaces with you, all right? So you can go ahead and pick up the workspaces and check it out as well. And it's been shared under the Ideas tab. So look under the Ideas tab right here. If you go to the smarttrader.com website, go to Ideas, look for Harmonic Patterns, and you'll be able to find my my workspace that I've gone ahead and shared with everyone. All right, now, yeah, you can see that price moving up. So what we're doing is when we go to the EA, all right, we're going to go ahead and move to the Euro Aussie chart right here. And here it is right here. And I'm going to be looking for what? I'm going to be looking on this one right here, buy opportunities only. All right, buy opportunities only. I've already set my EA to a buy only, strategy 2, risk percentage at 0.1%. All right, everything's set, ready to go. All right, and the automation is going to do everything for me. I'm just going to let the automation do what it needs to do, and I'm just going to watch it throughout the next couple of days and see how many trading opportunities I pick up. Now, you can take a look over here. Yeah, we got the Euro JPY. Euro JPY, we deployed the system after the pattern actually was presented. And if you take a look over here, we have actually set this up for a sell opportunity. So the Euro JPY, I'm actually looking for a sell opportunity, not a buy opportunity, based off our directional bias. And I'm going to go to the Euro JPY chart, and I'm going to show you why we're looking to sell. So there it is there. All right, we spoke about the price breaking through this upward channel, breaking through to the downside, coming back to retest the backside of the channel right here, and actually starting to work its way back to the downside. So we're thinking that Euro JPY will continue to go south, and all we want to do now is follow the trend to the sell side. All right, continue to trade it to the downside. And so we're looking for bearish patterns here on our trading system. There it is there, okay? So there is that pattern right here. So it's not going to pick up any buy patterns, but we're definitely going to look for sells. Now let's take a look over here on the EuroCAD. EuroCAD setting up over here. Let's see what we're looking for on the EuroCAD. we're looking for sell opportunities. All right. So on the Euro CAD, we're looking for sell opportunities. Now, the system is not going to, if you have a pattern already labeled on the chart, like we have here, and I deploy the system after the pattern had actually formed, it's not going to fire a trade until we have an adjustment to the pattern. And yes, the pattern can be adjusted, all right? If there is a pattern, it'll trade it. If there's no pattern after the adjustment, if the pattern's invalid, we're not going to get a trading opportunity, all right? So here is, we're running the system at the moment right now, and we're waiting for a trading opportunity, all right? We're waiting for a trading opportunity. Now, we're going to wait and see exactly what happens right here. Currently right now, nothing is in. Let's see here. We go to the trading log. Nothing is fired off yet. All right, good. No open positions as of right now. Okay. Let's go ahead and continue. So, so what I did is I created, look here, I created workspaces. Euro workspace, pound workspace, Aussie workspace, New Zealand workspace. Actually, I didn't put anything under the US workspace right here, so we don't have anything there. But under these workspaces, Euro, Pound, Aussie, New Zealand, those 4 workspaces right here I have gone ahead and deployed trading opportunities. You can see right here. Here we have all the Euro crosses is Euro US dollar, Euro Aussie, Euro CAD, Euro JPY, and Euro New Zealand dollar. Those are the pairs that I'm focusing right here. Also over here on the right hand side, you'll see I've got under the pound crosses. Pound US dollar, pound Aussie, pound JPY, pound Canadian, pound Swiss New Zealand dollar. And if I go to the pound crosses right here, you'll notice that I have those pairs in position ready to start deploying trades. All right, so the system's running, and based off our directional bias on Friday, I've gone ahead and deployed the system, or at least the system, in that direction. So let's take a look at the US dollar. This is US dollar or pound against the US dollar right here. And I am buying pound US dollar. I'm looking for all bullish signals. Now, let's be clear on what I'm looking for right here. I'm not initiating the buy right now. But what I am doing is I'm deploying my trading system in that direction. All right, I'm deploying the trading system. I'm deploying the trading system in that direction. So when a pattern appears, a bullish pattern appears, it will trade it. Now let's go take a look at the Aussie, the pound Aussie right here. Pound Aussie, I'm actually selling the pound Aussie right here. You can see right here, I've got a sell only option here. Let's go take a look and see what it looks like from the chart perspective. And I'm going to go ahead and open up right here, go to pound Aussie, and see why we're trading pound Aussie short. And you can see right here, take a look. You see how we've got a pound Aussie rich in the top, right? We've got pound Aussie right here at the top. And so as price goes ahead and tests this, I'm looking for bearish patterns to trade it back down to the bottom of the channel right here. Right? We're looking for it to trade back down to the bottom of the channel. And so if it does that and we get bearish patterns appearing right here, we're going to go ahead and continue to trade that to the downside. Okay, so this is why I've used now the 1 hour time frame to go ahead and deploy my systems, because I'm looking for trading opportunity on the lower time frame in the direction of the larger time frame. All right, and so what's also important there for you to realize is that if you go ahead and deploy it on a 15-minute time frame, a 30-minute time frame, 1 hour, 4 hour, depending on the time frame will be dependent on how many trading opportunities you get. Now I'm going to say this: I'm going to be looking for quality trades, not quantity. All right, because there's a difference. I'm looking for quality trades. So I can go ahead and deploy my system on a buy and sell option, not just a sell or not just a buy, but buy and sell, right? I can do and deploy my system, my trading robot, with both directions. And I'll probably pick up a lot of trades. I can go down to a 15-minute time frame, and then there'll be so many trades I wouldn't know if I'm coming or going. All right? There'll be a lot of trading opportunities based on these patterns. But the thing is this: is it more quality trades or quantity? It's more quantity, right? And I'm not interested in quantity. I'm more interested in quality trades, because if you do the math and you do the back testing and you do all of the homework that you should be doing, you'll find out that it doesn't mean because you trade more, you're going to make more money. All right, doesn't mean because you trade more you will make more money. It's about the quality trades that you pick up, and so that's the focus here. This is the reason why we've gone ahead and drew in these downward trend lines and upward trend lines. We've got our directional bias in place, because what we're trying to do is we're trying to identify directional bias so that we get higher probability trades with quality trades, not quantity trades. All right, and so that's the purpose of our goal. All right, and so as we go ahead and continue, you take a look right here. We've got the pound JPY. Pound JPY, if I go ahead and take a look at the system that I deployed, you can see right here I've deployed a buy only option on pound JPY. We have a pattern here, but this pattern was already set up before we actually deployed the system, which means that we really missed out on a good opportunity here. But it is what it is. Since the pattern formed, you can see right here, we would have picked up maybe 37 pips so far on this trade. But that's okay. Hey, listen here. It's come. If it goes, it comes and goes, and it doesn't pick us up, it is what it is. If the pattern gets adjusted, we'll get in on the adjustment. All right. So we'll continue to monitor that. Here we have the euro. This is the sorry, not the euro. The pound New Zealand dollar. Pound New Zealand dollar right here. We're looking for sell opportunities. So which means that this is a buy opportunity. We're not going to trade a buy opportunity. We're looking for bearish candles, right? So we're going to look for bearish patterns and trade those bearish patterns. If we don't get them, we don't trade them, all right? Again, looking for the highest probability. We went ahead and actually set up the Aussie. Here's the Aussie workspace right here. And you'll see on the Aussie workspace we have 5 currency pairs we're focusing on. We've got Aussie US dollar, Aussie CAD, Aussie JPY, Aussie New Zealand dollar, and then Aussie Swiss franc. And each one of these systems that we're running it based off our directional bias. All right, and our directional bias is, once again, let's go to the Aussie US dollar first. Take a look at the Aussie US dollar. So Aussie US dollar right here, we went ahead and set up a trade, and well, let's go ahead and take a look at price has gone ahead and fallen, retraced, fallen, retraced, fallen. We've come all the way down to the 127, which is a great place to start thinking about buying Aussie US dollar right here. Right? Not because we're expecting price to be long-term bullish, but no, because we're expecting a short-term rally in Aussie US dollar. So we're expecting price to go up. So what are we going to do? On the lower time frame, we want to possibly go ahead and buy only. All right, so let's go take a look and see, make sure that I have gone ahead and deployed our trading system in the right direction. Here's the Aussie US dollar right here. And let's go ahead and take a look at the script. And the script says, yep, buy only option right here. All right, starting to get it? So buy only option right here, which means we are just going to be looking to buy only. All right, just look to buy only. So let me go through the breakdown of what this looks like. All right, I'm going to go ahead and kill the script right here, and I'm going to go ahead and reload it on again so you get the idea. All right, so this is the idea. What I'm going to do is, once I've defined my directional bias, I'm going to go ahead and I'm going to open up the script, select my trading account that I want to go ahead and trade. I'm going to use the visual so I can see on the chart exactly the patterns that are forming. I'm going to make a decision on whether or not I'm going to buy only, sell only. In this case now, we're only buying only. I made a decision to trade strategy 2. All right, and as I said, strategy 2 is a multi-level entry point. All right, I'm going to go ahead and use the risk percentage, and I'm using 0.1% as my risk. That's pretty much all I need to do right here. Now, I do have a trail stop right here, and the condition of the trail stop is that once I get into a certain amount of profit, it's going to move my stop to break even, and then allow the market to go ahead and move to my target. All right. So there is that break even, move stop to break even rule that will apply once price moves to a certain level. All right. And I'm going to go ahead and just apply that because I've got everything activated on all the currency, all the patterns that I want to trade. I'm just going to go ahead and apply and start that. It's going to start loading up. There it is. Boom. It's very quick. Loads up, and now it's ready to rock and roll. Now, I don't have to do anything right at this very moment right now because everything is going to be working on automation. It's going to be doing everything for me. I don't have to do any sort of heavy lifting on that. All right. So that's how it is. We're going to go ahead and leave that, let it run, let it do what it needs to do. We're not going to have to focus in on this anymore. We're just going to stick to our directional buys. And remember, once again, go to the part one of the if you've forgotten the directional bias, go to part one of the series and check out the video and check out the directional bias for each one of these currency pairs in which way you want to go ahead and deploy it. All right. What we did focus in today is focusing on how to deploy it. Number one. Number two, the equity management around it. Why are we using the risk that we're currently using to keep the risk low so we don't over leverage. And then, of course, at the same time, we have to allow the system to trade and do what it needs to do. So we've used directional bias to go ahead and deploy the trade in that direction. We've got good equity management on the trade. And now that we've gone ahead and done that, now we just got to let the trade play out this week. Let's see in a couple of days how things have turned out, and then go ahead and evaluate the trades. All right? That's all we need to do right now. Traders, hope you guys learned a little bit from that, picked up something from that. If you have any comments, go ahead and throw the comments in, like, share the video, and also do me a favor, if you haven't subscribed to the channel yet, go ahead and do so, because when we go ahead and post any new content, you're going to get notified of that new content. Alright, and if we go live, you'll also be notified that we are going live. Alright, so with that being said, I'll see everyone back in a couple of days as we go to the part 3 of the series, where we go ahead and review the trades, and then we talk about exactly what's going on. And if you have any questions, you go ahead and let me know. Alright, good. I'll see everyone then. This is FxBigDog signing off.